It all comes down to power.
Are we talking about Bitcoin mining? Or are we talking about AI data centers? Or are we talking about both?
This lease is solely for AI compute.
My thesis is very simple. If you have the power, you have the permits, you have the land, you have the support of the local government, you're agnostic to who the tenant is. The only reason they're knocking on the door is power.
The largest site we've acquired is 1 million square meter land in Finland. It has a power capacity ramp up of up to 1,000 megawatts. That's a $10 billion project just on the infrastructure side alone. Lease in itself, upon completion of the lease, should, based on market comps, attribute approximately a $2.3 billion of enterprise value.
Would you say that Amazon, Google, are these competitors or are these future customers for Bitzero?
Potential future customers. And others like Meta, Oracle, the demand doesn't stop at one name or the other. They're all looking for it right now.
Whoever has the power gets the deals. That's it. If you don't have power, you don't have anything.
This is really interesting, and I feel like we only scratched the surface. Hey everyone, welcome back to another episode of Deep Dive Podcast. I'm your host, Rachel Wolfson. Today I've got a great interview lined up for you. I am speaking with Mo Bakhashwain. Mo, apologies if I mispronounced your last name. And he is the CEO and founder of Bitzero. So in this interview, Mo talks all about data centers and what Bitzero is doing with data centers and how important geography is, how important infrastructure is. And he goes into all of the detail there. So this is a really great episode, especially if you want to learn more about Bitzero and what they're doing with data centers. Before getting started with today's interview, I also want to take the time to remind you guys to smash that like button, hit subscribe, be sure to stay in touch because I've got so much more great content coming your way and I don't want you to miss anything. I also want to take a minute to thank Chatroom Podcast for letting me film today's interview at this beautiful podcasting space in Miami Beach. Big shout out to them. If you want to learn more about Chatroom, you can find out more in the show notes. Okay, without further ado, let's get started with today's interview. So Mo, tell us a little bit about Bitzero and what you are doing with mining.
We were mining Bitcoin since 2021. We started by acquiring a powered land asset in Norway, building the infrastructure and the high voltage ourselves from the power source directly to our site. We control our power feeds into the site. The core focus of Bitzero is asset first, ownership of the assets, having a tangible asset behind the operations. Those assets can be used for any industry. You control the land, you control the power, you have the local support, the local authorities behind you, and you're able to leverage that asset for any industry. It's like owning a commercial building. You don't have to lease it to one tenant or the other. You can have various businesses in that commercial building, which is what our strategy has been from the beginning. Control the asset, bring the operations online, and leverage it in the best possible way for our shareholders. We started with Bitcoin mining. We've achieved great results there. Our break-evens were extremely competitive compared to the rest of the industry. Our power price is extremely low, depending on FX conversion of Norwegian kroner and USD. It falls anywhere between 3.5 to 4 cents USD, which is extremely competitive. After that, we started acquiring additional sites. So we acquired the site in North Dakota. That's more of a long-term asset for Bitzero. And most recently, the largest site we've acquired is 1 million square meter land in Finland. It's 4 plots of land, totaling around 970,000 square meters. And it has a power capacity ramp up of up to 1,000 megawatts. The CapEx for those build-outs are in the billions. So for 1,000 megawatts, that's a $10 billion project just on the infrastructure side alone. That's excluding the GPUs, which is basically on the tenant. GPU as a service is something that we did look at. However, we want to, get into the co-location side of things, which we've announced yesterday our commitment towards through the LOI we've signed yesterday. It's a 15-year lease potentially with revenues of around 176 million per annum. We expect that to start coming in the third quarter of next year upon completing the build-outs for our tenant. and that will repurpose our Norway asset completely for GPU clusters. And we're looking to also place the 100 megawatts in Finland. That is the first load of capacity we are receiving there next year to the same cause. We've already partnered with CBRE and with best-in-class engineering firms in the data center space to take that to market for hyperscale tenants.
And Kevin, you are obviously interested in Bitzero, so tell us a little bit about why Bitzero is an interesting project for you.
Power, incredibly competitive, attractive power price. My thesis is very simple. If you have the power, you have the permits, you have the land, you have the support of the local government, you're agnostic to who the tenant is. I mean, it's going to be, they'll all come knocking because they all have the same problem. They can't get these. But the constraint in the whole investment thesis about power, nothing happens, whether it's digital payments, Bitcoin mining, you mentioned earlier, AI compute, cloud compute, whatever it is, it's all about the power. And so my only investment thesis with Bitzero is hearing about these power contracts, these hydro contracts in Norway and the nuclear power in Finland are phenomenal. I mean, you can't get those prices anywhere near those prices in North America. Maybe Alberta, maybe. But it's hard. I mean, those already exist. It's not a speculation. So that was the investment thesis. And so far, it's proven to be correct. I don't care which tenants the management wants to bring in. I'm agnostic. They're going to be market rates. But the only reason they're knocking on the door is power.
So Bitzero is not in the United States yet. You don't have a facility in the U.S. Is that correct?
We hold an asset in the U.S. It's non-operating. It's a very particular asset that requires a specific type of tenant. It's a high security asset. It was a decommissioned bunker. So that kind of asset is suited for sensitive, highly secure data, other programs that require like a high level of security around their data and their model training, potentially other activities.
How important is that, Kevin, to have an asset like that in the United States that, Bitzero has?
Investors are agnostic to where these are located as long as they're not in a war zone, which we've just found out is detrimental to data centers because they get hit by drones. So Finland, Norway, extremely stable. Canada, stable. United States, stable. So, the North Dakota asset I'm familiar with, it's, described on the website of what it is, but it's not an operating business, so I'm not expecting as an investor any cash flow out of it. But this LOI that the company made public yesterday is about, a very material amount of money, and obviously the stock's reacted positively, which I think is great. But my thesis is that's just one tenant. I mean, there's room for plenty more. Whoever has the power gets the deals. That's it. If you don't have power, you don't have anything. You don't have anything. You don't have Bitcoin. You don't have stable coins. You don't have anything. That's what you're looking for as an investor, finding those vehicles that can deliver on that promise in areas that are more stable, not less. And so that's how I discovered Bitzero.
Wonderful. Well, thank you.
You got it.
Yeah, well, Mo, thank you for telling us a little bit more about Bitzero, and definitely happy that Kevin could chime in there. Now, there was some big news announced this week, and it was the first week of May currently, or the second week of May. I'm forgetting time here. But tell us a little bit about that news with the data center that you have in Norway.
The news yesterday about the data center, it's in relation to our data center in Norway, which is currently running 40 megawatts of power, expanding to 110 megawatts by the end of the year. That LOI crystallizes Bitzero's commitment to leverage its assets in the best possible manner to derive value for our shareholders and to maximize the asset value through moving into GPU clusters. We would be building a tier 3, tier 4 data center on that Norway site for the entire 110 megawatt facility. And that will be purely for GPU deployments. That's our flagship asset in Norway. Can grow up to 300 megawatts. So the plan is to grow another 200 megawatts subsequent to this. We're not bound to the same tenant. We can place it with the same tenant or other tenants. So we do have a lot to serve the industry in Norway and in Finland. That lease in itself, upon completion of the lease, should, based on market comps, attribute approximately a $2.3 billion of enterprise value to the business. And that's for each 100 megawatts of contracted lease for GPU clusters. And we're looking at 300 potentially in Norway and 1,000 megawatts potentially in our Finland site, with the first 100 in Finland coming in 2027.
Wow, very impressive. Now you say tier 3, tier 4. What is the tier system with data centers?
The tier is basically what your SLAs are. So your service level agreements are either to a tier 3 standard or to a tier 4 standard. And that tier is determined by multiple factors like backup power, whether you have 2 lines, 3 lines, fiber redundancy. So redundancy of power, redundancy of fiber, redundancy even of water and cooling, direct-to-chip cooling, HVAC systems. So the more redundancy, the more backups you have, the higher the tier you are. So that's basically the tier classification in a data center.
Okay, yeah. Well, thank you for clarifying because I wasn't sure. Now, can we talk a little bit about, these data centers? Are we talking about Bitcoin mining? Or are we talking about AI data centers? Or are we talking about both?
We're talking right now, this lease is solely for AI compute.
Okay.
So for GPU clusters that are only produced by 2 companies in the world, AMD and NVIDIA. That's basically what it's going to be for the whole 110 megawatts. We're always going to look for how to use mining to make those tier 3, tier 4 data centers more efficient from power point of view. But that's something that we would be looking into further down the line once the data centers themselves are at a mature stage, where we can introduce miners or we can introduce Bitcoin mining as kind of more of an efficiency, or capturing the power that is not being consumed and is being just parked there for redundancy. So it's more of an optimization tool that will also be making profits.
Do you think that mindset should be kind of the way that the Bitcoin mining industry should go? I mean, we've seen before Bitcoin mining facilities that are also doing AI compute. Core Scientific was doing it, right? Do you think that Bitcoin miners that want to survive long-term need to start thinking about a strategy that involves AI compute as well?
It all comes down to power. If someone's paying 1 cent power, they'll still be making much more cash flow on Bitcoin and having much less capex to have to invest. Now, the quality of the build out, the way you'll have to keep changing your miners, updating your miners for efficiency purposes, those are the things you need to take into account. But if your power is that low, you will always be positive and mining positively. And a lot of Bitcoin mining around the world is in countries where there is that cheap power, but not necessarily politically stable countries, not necessarily friendly countries, not necessarily countries we would want to operate in, or any of the miners that you might have in mind. So the miners that are located in well-located countries with robust geopolitics, with strong power access, will eventually leverage their assets towards GPU clusters. That's basically the direction most miners are taking. Public miners such as, you've seen TeraWulf, Iron, Core Scientific, Hut 8, they all announced that they are pivoting towards AI, and it has been going well. I'm not sure how advanced they are in terms of their build-outs so far. I haven't seen that, but I have seen all the announcements, and I've seen the impact that it has on their stock prices, which is great. It just consolidates and the value of Bitzero getting into the space. So we're seeing multiples of 20x, 25x on those companies, which takes us out of the speculative asset ownership, Bitcoin mining, power play into a more institutional, long-term cash flows, investment grade kind of entity. That will basically hopefully give us the multiples we're looking for, which are the 20, 25x that our competitors have enjoyed because of the pivot. And we're ahead of the curve in that sense, because most of our competitors are retrofitting, are removing capacity to add to introduce the GPU clusters. In our case, we are growing on our own assets, and we are making the growth capacity available for AI. So we don't have to retrofit. We build to spec much faster, much better quality, working with the best in class engineers, developers in the world when it comes to data center engineering. And we will be making some announcements around the engineering, our execution. We will look to keep the public as informed as possible on our progress from an execution point of view, because when it comes to data centers and when it comes to these LOIs that are being announced by other companies, an LOI is an LOI, a lease is a lease, but development and construction, build out and turnkey of a facility with the SLAs required for the tenants that we would want and with the quality that we would want to deliver to those clients, that is the hard part of it. Not the financing of it, not anything except making sure that the execution is robust. Otherwise, any project would fail. It's not like building a Bitcoin mine. It's building Bitcoin mining facilities is what we call a tier 0. So you're talking about tier 0. You don't need redundancy. You don't need, a liquid cooling necessarily. You can compromise on a lot. Getting to the quality that will run GPU clusters for the clients that the hyperscalers, essentially. That's the challenge. For us, it's not. I come from a real estate background, so I have been in developments my whole life. We worked with the best-in-class engineers when it comes to data center development, Red Engineering, which are owned by NG Energy. We are already engaged with various parties such as DCI, Vertiv, other EPC contractors that have executed best-in-class AI compute facilities in the Nordics and in the US. We are surrounding ourselves with the best-in-class and even semi-investment grade entities from an engineering standpoint. Mm-hmm. So basically, we're taking no chances to fail on the core of it, which is execution.
I mean, yeah, that's really insightful and important. Now, would you say that Amazon, Google, are these competitors or are these future customers for Bitzero?
Potential future customers.
Okay.
Absolutely.
Okay.
Amazon is a potential future customer. Google is a potential future customer, and they have been active in the market, maybe not directly, also through neoclouds that they support. We have seen some activity there, and others like Meta, Oracle. The demand doesn't stop at one name or the other. They're all looking for it right now.
Mo, what is the biggest, we talked about challenges, right? But when you're looking for a site for a data center or just building out the data center, what is the biggest challenge in your opinion when it comes to something like that when we're talking about tier 3 or tier 4?
Yeah, when acquiring a site, we would look at the location geographically. We would study the local power grid thoroughly. We would look at connection points in proximity to what location we're looking at. And we would verify the available loads on those connection points. And we would do some pre-engineering and routing to make sure that we can deliver the SLAs and the redundant power and the redundant fibers. Like, we would do a full assessment on every box that is needed to be ticked for a tier 3, tier 4 data center ahead of acquisition. It's been Bitzero's strategy from day one. We would not acquire a site should we not have very strong local authority relationship and backing in any of our sites. If that doesn't exist, we're not entering into it, because that's how data centers fail. If you are in a location where you have the power, you have the land, even if the land is zoned, but you don't have the backing of the local authorities, you will not be able to build. And building permits and zoning are completely different things. So someone could say they have a zoned land, building permits are on top of a zoned land. And if you don't have the local authorities supportive of your project, and if you don't think of the local residents, if you don't think of giving back to the places where you're located, you're not going to have that support. And that's what we do, whether it's in Norway, whether it's in Finland. We have extremely good relationships with the local authorities in both our regions. We have their planning division support, we have their mayor's support, and we give back to both regions. So, for example, in Norway, a portion of our power bill that we pay goes directly to the municipality. They can spend it on schools, they can spend it on hospitals, they can spend it on agriculture. It's for them to do with what they want. I don't think anyone has a portion of their power bill going directly to where they're located in terms of the municipality's actual fund. So that is something I'm really proud of. And if I can buy more power of that nature that will pay directly to the municipalities, I would prefer buying that over the classic load, because it's two things. I'm getting cheap power and I'm giving back. What better is there?
Yeah, and it's a message that I think we need to get out there to people who are worried about data centers and freaking out about the noise and the pollution, all these things, the misconceptions.
Absolutely. In the US, it is a problem because power grids have not been developed to the extent that they have been developed in Nordics and in Europe for a simple reason. They're concentrated around populated areas and less developed or less thought through for the future further away. And that's where and why, and fiber cables as well. That's where and why all the developers in the US are located near cities, near populated areas. Unfortunately, I would say for them to take into account the noise pollution, the waves pollution, the health effects of a data center of that scale being located near a populated area, it would add quite a bit to their capex. You either have to add a lot on your capex to remedy that and think of the people surrounding you, or you have to go somewhere a bit rural. So there is really no option for those operators but to be located there, but also they either do it right and take into account what they're affecting nearby, or you should look at rural locations such as the asset we have in the US. So that's why I mentioned earlier, it's a long-term asset for us. It's something we believe that will be a target once this problem is more emphasized. I do understand the point of view of the developers, and I do understand the point of view of the residents. No one's at fault here, because sure, if I look at it from a cash point of view, adding even a couple of million on top of the capex for tier 3 data centers, it's a lot. Mm-hmm. It's not a small undertaking, and I would understand why, it won't make sense from an economic decision point of view to do that. But where is their power so they can go elsewhere? Where is, a place with power, with support, and with facilities so that the people that are operating that site would be? And yeah, so there is definitely a shortage when it comes to the base infrastructure here that could accommodate that growth, which Kevin mentioned earlier.
Yes, well. Yeah. Well, Mo, I wish we had more time because this is really interesting and I feel like we only scratched the surface. So we will do a follow-up, hopefully in person, but any final thoughts for our listeners today that you want to leave them with?
Well, I would just go back to Bitzero. We are now publicly stated, committed to GPU clusters and AI compute with our assets. Our assets are some of the best renewable energy in the world, the most stable grids in the world, Finland and Norway, and we are looking to grow very fast from here after this first contract. So I would just keep an eye on Bitzero from here on out.
Yeah, and I will, and I'm sure our listeners will as well. And let's do a follow-up and really dig in a little bit deeper next time. And I appreciate you, Mo. Thank you so much.
Thank you.
Thanks. Special thanks to 4Labs Digital for producing Deep Dive Podcast. I'd also like to thank the sponsors behind Deep Dive. You can click the links in the show notes to learn more about each of the initiatives from these sponsors. Finally, thanks to the listeners for tuning in. Please be sure to subscribe, like, and share.